Well, back in 1991, Nike was under pressure from activists to change the terrible conditions in its factories in Indonesia. It was forced to make changes or lose customers and investors. And consumers are increasingly searching for ways to find out just how ethical brands really are. Ethical watchdogs say that companies from big tech to big oil need to drastically improve transparency on their environmental and social impact. As awareness about these issues grows, so too is interest in something called ethical investing. Well, ethical investing is no longer just about avoiding the so-called sin stocks, gambling, alcohol and guns. Monitoring the social, environmental and governance of companies is a growing trend. McKinsey has estimated that a quarter of the $88 trillion of assets under management globally is now invested in these kinds of assets. Norway has the biggest sovereign wealth fund in the world, and it's signed up. But does doing good in your investment portfolio improve your bank balance? We don't know yet, as there isn't enough information, and all investments have risks. But increasingly activist investors are putting pressure on companies to adopt ESG practices in order to improve long-term performance and company culture. And a future generation of investors is paying attention. Triodos Bank says that nearly half of 18 to 34-year-olds in the UK plan to invest in a socially responsible investment fund. Joining us now from London, Patrick Connolly. Patrick is a chartered financial planner with Chase de Vere, an independent financial advice company. Good to have you with us, Patrick. First of all, what exactly do we mean by ethical or responsible investment?
That's a really good question. Ethical investing is on a journey. The first ethical fund was launched by Friends Provident in 1984. At the time, it was probably unfairly dubbed the Brazil Fund because the argument was that you'd have to be nuts to want to invest into it. Traditional ethical investing is about excluding sectors which are deemed to do harm. So sectors such as weapons manufacturing, alcohol, gambling, tobacco. The idea being that if you invested in those, you're missing out on some high growth areas. And if you're missing out on high growth areas, then it's probably not a very good investment proposition. Now, what's happened in recent times is the concept of ethical investing has changed and is largely being replaced by something called ESG. Now, ESG stands for environmental, social and governance. And what companies do is look to invest in firms that make a positive contribution to the environment, to society, and have strong governance measures, things like diversification and equality. So we're on a journey now from excluding sectors we don't like to investing in companies that we do like and who are adopting the right approaches, which seem to be a more positive approach.
Now, back in the 1980s, of course, greed was good. Is that still the case
Yes.
in 2018, or have investors developed a conscience? Can they actually make money out of ESG investments?
And that is a key question, because traditionally ethical investments were deemed to be a compromise between your principles on one side and the profits you want to make on the other. That again has changed, and the argument with ESG is that if you're investing in companies that are adopting the right practices, then in the longer term, they will be the more successful companies. The proof of the pudding isn't yet seen. We don't yet know how that plays itself out, but people can now invest in these companies and in these funds without the starting point that actually they're probably going to lose out by doing so. So the answer is yes. Hopefully there is more scope, one, to invest with your principles, but also two, to invest in a profitable way.
And do we know who is investing in these ESG funds and companies? Is it just millennials, or are older investors getting on board too?
Millennials seem to be the main area where there is interest in this sector. It does seem that the youth of today perhaps are more conscious about a lot of issues than people who are older. Unfortunately, it's older people that tend to have more money. So it's older people who have more influence in terms of inflows. We do see certain sectors of society, in terms of older people, who are investing more. For example, the company I work for run a service for the medical profession. And we get lots of doctors who are interested in investing ethically. Now, that may well be because of the altruistic nature of what they do, the harm that they see that gambling or tobacco or alcohol does. And so a lot of doctors, for example, do invest ethically. that's not really as yet transmitting itself through older investors. And so while there is more interest in ethical investing, the millennials, as they build wealth going forwards, you would hope and expect to see that actually translated into more money being invested.
What about corporate culture itself? Is that changing due to the fact that people are now essentially talking with their money and holding companies to account? They want to be able to trust the companies that they're investing in.
Yeah, it's not changing yet, or at least not to any great degree. It's gradually changing. What we are seeing is investment companies being more activist. They're going out there and demanding that companies act in the right way. We see that a lot in the news with things like executive pay and bonuses and the like, where shareholders now are standing up and objecting to that. That is a trend that should continue. It's a trend that looks very likely to continue for two reasons. One, as you alluded to, as more money goes into these funds, as millennials gain more wealth, then shareholders and group shareholders will have more influence. Also, number two is with traditional ethical investments, people have had to make an active decision to invest in them. They've had to decide, I want to invest ethically. Whereas with ESG, firms are now starting to adopt ESG in their general investment process. And so investors can be investing in ESG perhaps without realising it. But what that means is there's more money behind that approach and more influence that these companies will have when they're dealing with the companies they're investing into.
So how important is it, Patrick, for investors to understand the different nuances of the funds that they're investing in? Do we really know what we're buying with ESG assets? We really don't.
With regard to ethical investments, it was pretty clear. You knew you were avoiding weapons manufacturers and alcohol and tobacco and gambling and all these things. ESG is far more subjective. Different companies are adopting entirely different approaches to it, and also in terms of the strictness as well. So it's all well and good for investment firms to say, yes, we take account of ESG in our investment process, but do they take account of it and use it, or do they take account of it and ignore it? And the only way that you can be sure of that is either one, by doing your research, or two, by using an investment professional who'll do that research for you. But at the moment, it's grey. At the moment, it's subjective. At the moment, it's quite new. And so we need to see more developments in that area.
Fascinating. Patrick, many thanks indeed for being with us on Counting the Cost.
No problem at all.